Good morning. It's Tuesday, February 14th. I'm Steve Rand. This is Todd Graff, and this is the Gold Spot. Todd, we're living in a very, very strange world right now. In the 1950s, when somebody saw a UFO, they would tell you it was a balloon. Now we're living in a world where somebody sees a balloon and they're saying no. The government's saying it's a UFO. I don't even know what to make of this anymore. But obviously things are crazy everywhere. We've seen the gold price pull back a little bit. People are certainly reacting to it, and it's not just individuals, it's central banks.
Right, Steve. So a lot of things are changing right now with money, with currencies all over the world. There's a huge shift going on, and countries are moving away from the US dollar. And the main thing they've been purchasing is gold. Central banks have been buying gold at the fastest pace in decades. Mainly China, but other countries as well, Turkey, Croatia, countries like that. And when you stand back and think about it, it makes sense for them to do that. Saudi Arabia announced about a month ago that other countries, mainly China is who they were referring to, but are going to be able to trade oil in currencies other than the dollar. So why would these countries want to hold our currency when they don't need to anymore? You know, they're not trying to hurt us necessarily, but you know, they're watching out for the best interest of their people. And what that means overall is less of a demand for dollars is bad for our currency. That means inflation, which we're already seeing. You know, we know what central banks are doing to protect themselves by buying gold, very large amounts of gold. But what about individuals?
Right, and we're seeing it, I mean, in our numbers. I mean, the amount of referrals that we have seen over the course of the last month or so has been the highest we've ever seen before. I've got clients that are calling in and saying, hey, I've got a few people I want you to call. I know you were telling me the same thing the other day, that we're getting a lot from you. But not only on top of that, we're getting a lot of people that really pretty much were at the end of where they thought they were going to be adding to their gold positions and silver positions. And they're really increasing that a lot because, again, they don't want to hold on to dollars. They're holding on to something that they know is a depreciating asset. Inflation is rising. It's probably going to continue to rise. And also with this pullback we've seen recently in the gold price, it's created a really, really perfect storm for them where they have the opportunity to not only increase those gold reserves like central banks are doing, but also doing it at a smaller price or a lower price. And I'm sure you're probably seeing that as well.
Yeah, absolutely. A lot of my clients right now, you know, what they're doing is they're trying to convert as much of their US dollar assets, whether that's stocks, bonds, money markets, CDs, annuities. They're trying to convert these paper assets into physical gold and silver, just like these large countries are doing with their billions of dollars, trillions of dollars of reserves.
Right. I mean, obviously, if they're doing it for a reason. We're talking about some of the smartest people on the planet that control the economies of the largest economies in the world. So if they're doing it, obviously it makes sense that our clients would do it as well. Thanks for joining us again on the Gold Spot. We'll see you next week.